Hey, good morning. Let's go over today's trade plan. So in the overnight session, for the most part, the market has been balancing within yesterday's range. The probe above yesterday's high attracted sellers, and since then, the market has been balancing in a relatively wide range, and we are continuing to run on above average volume. For example, so far in the overnight session, we're running on almost 3 times the average volume. So this is still a fairly high volume environment. And when the volume is high, we tend to get more volatility and better ranges, which usually means better opportunity, but it also means that you have to widen up your stops a bit so that you don't get stopped out prematurely because of that higher volatility. So in a more normal volatility environment, a 2.5 to 3 point stop is usually sufficient, but in this high volume, high volatility environment, it's better to use a 4 to 5 point stop so the trade has some room to work out and you can survive that short-term noise or chop around a given zone. So when it comes to stop size, it has to match the volatility environment that you're trading in. On the downside, a break and hold below 49.5 to 53.5 would signal the sell side in control, and from there we can go down into the previous VPOC at 44.5 and then retest yesterday's lows at 36.25, 39.25, where technically buyers can still be active, but if the market is selling off on excess weakness and some pretty decent and sustained downside momentum, then there would be potential to head lower into 30 to 33, where technically buyers can still be active, and then below that we have support at 21 to 24, which also marks a range extreme, and buyers can be active there as well. So heading into the open, our intermediate term bias is still neutral bearish. We know that we are still trading in an overall bearish environment, and we've seen a lot of selling pressure anytime the market tries to head higher. And then given that it's a Friday and we're heading into the weekend, I don't think anyone's going to want to hold their long positions that are initiated at higher prices. But at the same time, the market is really overdone to the downside as well. And I don't think any shorts are going to want to hold their position into the weekend either. And that's why if the market gets exhausted into the support areas below, like 30 to 33 or 21 to 24, I think we can get short covering at those zones and get some pretty decent intraday bounces as well. So given how the market has behaved over the last week and where it's trading now, and given that there's this news risk with the current dealings with China, I think neither side, the buyers or the sellers, are really going to want to put on big risk heading into the weekend. And that can create an environment where you get two-sided trade, but because we're in high volume, that two-sided trade can happen in a bigger range. So for example, if you look at yesterday and the overnight session, you'll notice that the market can put in 25 to 35 point directional moves and then put pretty decent reversals after those moves as well. So in this higher volatility environment, we have to be prepared for the market to make 25 to 30 point runs on the day time frame before the market is truly exhausted. So that's the type of market we're dealing with right now. And again, off the open, how the market behaves at 49.5 to 53.5 and 61 to 63 will provide us with a short-term tell as to which side is being more dominant, but our short-term bias is still going to be neutral today, and that means that we are going to have to pay close attention to how the market is behaving in real time to determine which side is in control.